Siddharth Khemka too on the show with us. Siddharth, hi. What is it that you're making of the market right now? The earnings season, definitely, with the kind of valuations that we were subscribing pre that, hasn't been all that, pleasing, so to speak. Where is it that you are finding pockets of disappointment and still feel that the valuations could ease off?
Yeah, hi, good afternoon, Aisha. So I think if you look at the overall earnings picture, that definitely is not looking that great. At the start of the quarter, we were expecting Nifty earnings to grow by just about 2%, largely being dragged by some of the global commodities, metals, oil and gas. So if you remove them, still the earnings growth would have been around 10%. And we have seen a kind of earnings this quarter, which is kind of subdued, disappointed. I think that 10, the number of the expectation of 10 is also at risk. For the full year itself, the earnings growth on back of a high base. Last year, Nifty earnings grew about 26%. This year, the expectation is about 7-8% earnings growth. And as you rightly said, with a 7-8% earnings growth, Nifty is already trading at 21 and a half times. That doesn't leave much room for upside. What we are witnessing and what could continue to happen is a lot of sector rotation, stock rotation that we could witness. Within sectors, we could see rotation where earnings are pretty strong there. A lot of focus would be there. Clear example being the FMCG space, where the ones which came out with weak numbers were punished, while the one which came out with decent numbers, the likes of ITC, we saw decent numbers from Godrej Consumer. Those could be the stocks which could see some solace in this sea of red. In terms of overall, if you look at sectors where we believe there could be some potential upside in the near term, because of the good earnings commentary and valuations being comfortable. So the first one that comes to mind is technology. We see some of the larger ones giving out good numbers, improving or upgrading their guidance on the growth, on the margins front. We also saw a lot of mid-cap IIT names coming out very strong numbers and guidance. And I think with the underperformance that we have seen in IT, plus the global volatility, it gives definitely gives an edge in terms of defensive structure to the portfolio. So IT is one place where we see some positivity in the near term. The other space is in the healthcare space. So I think for the last 4-5 consecutive quarters, the sector has come out with good numbers. Even for this quarter, the expectation is we'll see about 15% earnings growth compared to what we are seeing in the broader market. So that gives, again, some comfort that the healthcare space should do well. The margin pressure is kind of getting away. Growth is coming back from some of the key regions in US, Europe, and the Indian market, something that has been holding on pretty strong for the pharma companies.
Okay, so pharma is of course one space which is delivering okay earnings, good earnings, and of course there's the possibility of further upside on that. At what level, Siddharth, would you be buyer, let's say in the like of Dixon Tech, Indian Bank? And I don't mean the exact price point, but with the 10-12%, 10-20% cut coming in on IndusInd Bank, HPCL, Dixon Tech, should people look at buying that?
Yeah, definitely. I think if you look at Dixon, apart from a single point, I think the rest of the numbers were pretty good. The only point I could see is that after the sharp run-up, there was a good profit booking after the results. So this entire EMS space, we are very positive. We see strong earnings growth in the next 2 years. So the likes of Keynes, Dixon, Amber came out with very strong numbers. So we believe any correction in these kind of stocks should only give an opportunity to enter. Coming to IndusInd, I think very weak numbers. The commentary also not that strong. I would rather wait for one more quarter before entering. We have cut our estimates, but about 16-17% for this year and about 9% for next year. So I think the 18% correction to currently largely factors in this downward revision in estimates. But what it is still not capturing is the change in sentiments towards the bank, which could keep the stock under pressure for some more time. So I would not be in a hurry. There are banks which have done better. For example, Axis came with better numbers. HDFC, there is a glimmer of hope of recovery with that strong deposits growth. ICICI has been consistently delivering strong numbers. So there again, we expect good numbers from ICICI tomorrow. So I would rather focus on banks which are coming out with strong numbers rather than trying to catch something where you're still not seeing improvement in numbers.
Okay, point taken. That's the view coming in as far as some of these names which have taken a huge drop is concerned. So Dixon, of course, recovering from the lows, but still under pressure. Laurus Labs has actually done okay. The numbers were fine, and numbers were weak actually yesterday. But with Laurus, we have always seen on the day of the earnings, it's down. Next day, it recovers, and pretty much following the same suit. Indian Hotels has managed to perk up a bit. Godrej Consumers is the other one. Dr. Lal PathLabs, and all of these are earnings reaction coming in. Quickly marking some of the stocks which are gaining ground in the last few minutes. Pull up a JNK Bank and let's see if that one is showing some sort of traction, because on my screen there's a sudden spike that is coming up for that one. Exactly the case. Vinati Organics as well as Amber Enterprises is the one in focus. Poonawalla FinCorp, that's under pressure. In fact, that's the question, Siddharth. IndusInd clearly called out the pressure in MFI. But what about these individual MFI names, the likes of Poonawalla, Spandana, and a lot of these other names, Ugro, etc., where a large part of their book is MFI and unsecured? What happens to all of them then?
Yeah, I think if you look at the MFI space is clearly under pressure, and some of the ones, including Bandhan, which has also a large MFI book, is clearly witnessing headwinds from multifolds. Growth is not there. Asset quality deterioration is at its high. So I think that is a space one should clearly avoid. The other space is the retail unsecured lending, where if you recollect, RBI for the last few quarters has been coming out very cautiously on that segment, asking banks and NBFCs to increase the coverage, provision coverage ratio. They have added risk weightage to that book, and clearly we are seeing pressure in that front. So be it Bajaj Finance, Poonawalla, IDFC First, these are all the consumer lending companies which are facing slowdown in growth, which is corroborated by what the auto companies or the consumer durable companies are saying, that so far we have not seen that kind of growth which one was expecting in the festive season. So demand for consumer credit is also not picking up, and that is where I think across even the banks, the retail lending segment is showing the pain period. So that's a space one should clearly, I think, avoid in the near term.
Right, okay, completely avoid this particular pocket. 276 points lower, kind of defending that 24,000 mark for 100 mark for now. The weakest link then in the market, that's got to be clearly IndusInd Bank. There's of course Shriram as well, which is lower by about almost 6% as we speak right now. There's of course Bajaj Finance too, which is under pressure, down about 2.25%. SBI is down about 2%. Reliance down 1%. Bharti is down about 1% or so as we speak right now. So that's pretty much it. But Siddharth, we'll let you go on that note. Thanks as always for taking the time out and joining in.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.